Welcome into America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates. Securities offered through Peak Brokerage Services, LLC. Advisory services offered through the Retirement Guys Formula, registered investment advisor. America's Retirement Headquarters, America's Medicare Associates, and the Retirement Guys Formula are separate and independent entities from Peak Brokerage Services, LLC.
Welcome into, and thanks so much for joining us here on America's Retirement Headquarters, home of the Retirement Guys Formula, America's Medicare Associates, and Retirement Tax Partners with Nolan Baker and Dave Ross. 419-794-3030 is the phone number. It's 419-794-3030, online at arhq.com. My name is Chris Vaughn. Today on the show, is the magic number of money you'll need to retire just clickbait? If you're thinking about a Roth conversion, we're going to talk about how to pay the tax bill, and is it possible to design a retirement plan so that you don't have to live below your means? All this and more. But before we dive into any of it, let me check in. Nolan, Dave, glad to be with you for another show. How we doing today?
Just enjoying the cold weather. You know, it's hockey season for us over in Anthony Wayne. I know we're actively having a lot of fun in many of the high school hockey games, spending the weekends out watching. My son had an incredible score that I got to watch last weekend. It was fantastic. Hopefully he has another good weekend this weekend. So just enjoying the season, if you will.
I'm coaching a CYO girls basketball team this winter, and these girls are having a great time, and they enjoy playing with each other. It's really been a thrill to watch them compete, and since this is year 43 of my coaching career, I'm really enjoying every moment of it because it's probably going to be my last one.
Oh, okay. A little breaking news here on the show. But it is always fun to see a team come together and really, you know, all gears firing on the at the same time in accordance. And it's the same sort of thing. If I can make this parallel, because, well, that's what I'm here to do. The team at America's Retirement Headquarters, you know, the Retirement Guys Formula, America's Medicare Associates, now Retirement Tax Partners, because it's not just one thing you need to take concern with retirement, but it is all these things, making sure they all are working together for you. So one more time, I want to throw out that number, 419-794-3030, or the website to find out more about the team and set up a time to speak with them at arhq.com. Before we really dive into it, we'd be remiss if we did not mention, you know, obviously the horrific wildfires that are happening in Los Angeles. It's taken lives and the homes of thousands of people. And as a result, insurance companies, they're facing billions in claims. It's not the first time we've seen costly disasters, and, you know, unfortunately, it probably will not be the final time we'll ever see it. But it does raise this question, I think. What are the reviews that your office does when it comes to working with clients to make sure everything is taken care of?
Well, I do think it's important to review your insurance coverages every year. And, you know, again, what we do is that comprehensive overall plan. Again, it's called the Retirement Team Action Plan. It stands for taxes, estate planning, asset protection, and money management. And Dave, when we break this down, you know, there's a couple of, I think, key areas in insurance coverages that people need to review. And if it's been a couple of years since you've done it, now is really a good time to get together, get a review done, and there can be quite a bit of benefits from it. Either maybe some coverage that you're missing, maybe there's a gap, maybe there's a way to save some premiums on what you're paying. Those would be some good reasons. When we look at it right now during the open enrollment period, this is the time for people that have the Medicare Advantage. They get, you know, one opportunity if they wanted to change their coverage. And if we think about it and you look at an example of, say, 2025, you know, the big change that we saw in the health insurance industry, specifically for Medicare and some of the plans that are out there, is the cap in the cost to consumers for prescription drugs. Well, surprisingly, I think a lot of insurance companies are not in the business of losing money, nor are the prescription drug companies. So what we saw happen this year is a lot of the companies got rid of the plans that they offered. They made changes to the plans. So somebody might roll into this year thinking, hey, you know, my insurance coverage for Medicare is fine. I don't need to do anything about it. But what they may not realize is that they could have had major changes that happened with their prescription drug coverage. It's a great reason why during the open enrollment period, if you have the Medicare Advantage, again, have America's Medicare office take a look to see if there's anything that needs to be done. That's right here, you know, at our headquarter building. Health insurance, you know, that is an ever-changing landscape when you're trying to determine the affordable health care, where the income limits are, how to look at reducing what some of the costs are, or the out-of-pocket expenses that you have. And then that all transitions down into long-term care. When you think about long-term care, you have crisis, you have non-crisis plans, and the longer that you wait, the more likely it is to end up in a crisis situation where, dealing with the issue of protecting your assets if you or a loved one needs some type of long-term care, there can be a lot of easier solutions if you take a look at them while you're still young and healthy. Life insurance. Dave, I was teaching a class at a local country club, and this was a couple of years ago. And there was a lady that was somewhat distraught in the presentation. She actually had come up to me after the presentation. She was just about in tears, and what she had shared with me is that she had recently lost her husband. She went to go file a claim on his life insurance, and come to find out her claim was turned down from the insurance company. And speaking with her a little bit longer, what I had found out is that she had bought accidental life insurance. Her husband, unfortunately, he passed away from natural causes. So, she didn't realize that the coverage that she had wasn't going to take care of her in the time that they needed it the most. She lost her husband, lost some income, and now her world's upside down. With life insurance, we also go through something called a beneficiary checklist, making sure that your money goes the way that you want it to go. If you're philanthropic minded, who you consider as your beneficiaries for your retirement accounts versus your life insurance, those would be the type of reasons to have a review. The other reason is in the industry lately, life insurance has begun to add on some additional benefits in a lot of the policies that we work with. Issues like, well, what if you get hurt or sick while you're alive? They can have critical, chronic, terminal illness coverage. So there's, possibly a way to take insurance and use life insurance to help put a shield over your assets if you needed some type of long-term care. The other type of insurance to look at would be insurance to help protect against stock market loss. We've had a couple of great runs in the market here the last couple of years, and I hope 2025 turns out to be another great year in the market. But think about the person who retired, let's say in 2007, maybe had all of their money in their 401k. They're in this mindset of grow, 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 grow. And what happens is that mind shift didn't change when they went from their working years to their retirement years. And then when we had the 2008 market crash, from the top to the bottom, the stock market went down just a little over 50%. And in addition to that, if somebody moved from saving and accumulating to taking money out of their retirement account, they're negative compounding it. All of a sudden in, less than 2 years, they're really kind of upside down when they wanted to transition into retirement time to have some peace of mind. So when you're looking at when you should review your insurance coverages, you should do it every couple of years. We can offer a comprehensive plan where we can look at your health, your Medicare, your long-term care. We can look at your life. We can look at your investments, even down to some of the relationships that we have, looking at things like your home and auto and your business insurance. That's what I'm telling my clients. Dave, I would assume that you're kind of giving the same advice on, when people should review their insurance coverages.
Well, absolutely. Think about this. With only 35% of Americans working actively with a financial advisor, a lot of the scenarios that you just laid out are very real for folks. And I've talked to people who, when they lost half of their value in 2008, it took them a long time, and some people never got back into the stock market. So those losses become permanent. So, insurance has become a very multifaceted financial tool now. Death benefits for life insurance could also be used for a long-term care benefit if needed. And with that, the thing you need to understand is, what is the age of people when they need long-term care benefits? There's a lot of folks that don't need it until their 80s. Well, you're not going to buy life insurance in your 80s to cover long-term care. So that is really a decision that should be made prior to your retirement. Do you have the right coverage to protect yourself from a Medicare spend down? Do you have the ability to change your plan to take advantage of coverages that you may have? That's exactly what we do here at America's Retirement Headquarters.
Being able to do those reviews and make sure that you're still properly protected from whatever may come down the line, whether it is an insurance situation, whether it is a health situation, whether it is a market situation. That's what these constant reviews and updating a plan. Remember, they're not set in stone. Really comes into play. And so if you haven't had a set of eyes on your financial or your insurance situation in quite some time, perhaps your financial professional is not offering these, why not reach out right now, set up a time to speak with the team at America's Retirement Headquarters. 419-794-3030 is the phone number for that complimentary consultation, 419-794-3030. Or you can go to the website as well. Reach out there at arhq.com. Like others his age, billionaire Bill Gates didn't have smartphones and social media when he was growing up. He did play outside a lot with friends, and he loved to explore. He also spent a lot of time in his room alone, reading and thinking. Gates said that these habits helped contribute to the success that he had later on in life. If somebody is nearing retirement, guys, in that retirement red zone, 10 years or less, what are some financial habits they can adopt now to help them be more successful when they retire later on?
I am serving as an advisor to my daughter and two of her classmates, and they have taken on a financial literacy campaign. And the bottom line is their goal is to get more kids, students, early in life to start thinking about the financial decisions that they're going to have to make in the areas of spending, saving, and investment. And you know what? If you think about it, a lot of kids, their parents handle all of that for them, and then they finish school, and then all of a sudden they have to make all of these decisions once they get their first big boy or big girl job. So when you talk about starting early and being consistent, that's a very big deal, because you cannot start early enough. And the earlier you start, the less money you have to commit to it. You know, how much should a person be contributing to long-term saving and investment accounts when they first start working, especially if they have student loans or they have other debts that they have to pay off? So starting early and being consistent, that is a big deal. Having clear goals, well, you got to have goals. You need to be thinking about what are you trying to accomplish financially as a young person. I'm sure it means buying a house, buying cars, taking on some debt. Well, how are you going to manage that debt? If they follow Dave Ramsey, you should never buy a car that you can't pay cash for. But for many people, that's just not a possibility. So these habits of how to save, how to spend, how to invest, these are very important characteristics that every person's going to have to deal with, regardless of age. Young people getting started, and then people who are getting close to retirement. Should you try to retire debt-free? Should you try to retire with a comprehensive plan in place to cover for any potential pitfall that could be thrown your way? And that's what we do with the Retirement Team Action Plan. We take a look at all of those things. We take a look at developing, putting the independent income system in effect for you to help you cover all of the needs that you're going to have throughout retirement and give you a really good understanding of what you can count on once you're retired. So these financial habits are very, very important, and the earlier you can develop them, the better off you're going to be.
So you got number one, catch-up contributions, start early, be consistent, maximize those employer benefits. Number two, fund Roth IRAs. Number two is have those clear goals for what retirement looks like. If you're 10 years or less from retirement time, the third thing that I would say is stay away from debt. I mean, it's again what Dave Ramsey talks about in a lot of his principles of being younger in life. And I think those are fantastic principles for somebody young, but they're great principles for those people that are close to within 10 years or less of retirement time. If I think of the hundreds of families that we help here, One thing that I can say that's a consistent theme about those people that I'm like, I wonder where they're at this month or what are they doing and they're out enjoying life, is they are a group of people that usually are debt-free. Number 4 is the plan for an emergency. You know, we hear this debate all the time about what's called the, say, 4% rule, or, you know, what dollar amount can I take from retirement time? You know, people will take a withdrawal from retirement time and think, okay, my money should last forever. I ran a plan on that. But then all of a sudden, their kids are going through a divorce. Their child lost a job and they need, you know, some money to make their payments. You know, there's going to be some type of an emergency that comes up in life. You have a spouse that was forced to retire due to health care earlier than what you expected on. If you're within 10 years of retirement time, you want to plan for an emergency. Younger in life, I think good advice is to have about 6 months worth of income. You know, later in life, what I like to see is I like to see people have 2 to 3 years worth of income needs built up into non-market type of an investment. That way they can help them plan for any type of an emergency, whether it's a major market downturn, you know, whether it's helping out a family member, a loved one. And number 5 is understanding how to navigate the healthcare world. The decisions that you make about healthcare are going to not only impact the type of coverage that you get, it's going to impact what your overall cost is. Number 6 is create and update your estate plans. If you don't have an estate plan in place, the state and the county does. And I tell you what, I don't think you want the government figuring out what to do with your estate plans. Document what your wishes are. Get together with an estate planning attorney. Get those, you know, wishes put in writing. Or if the kids were little when you had these plans put in place, maybe they were just minors and you had things that you had wishes are back then. Now may be the time to update that estate plan. And number 7 is to monitor the plan. You know, here we are heading into the new year. If it's been longer than a year that you looked at your investments, that's a good financial habit to get into, is once a year or every 6 months, have an opportunity to sit down with your advisor, develop the overall plan. These financial habits can be good to adapt as you get later in life. And again, you know, teaching these habits to our children is also a big part of what we've done both in our family's life. And, you know, hopefully we can instill that good stewardship of money with you when we get together and talk.
All it takes, if you're within that, you know, 10-year window towards retirement, or it's never really too early to get serious about your retirement planning, but reaching out and start developing a plan, have that conversation with the team at America's Retirement Headquarters, find out how to go about taking these proper steps. 419-794-3030 is the first step, reaching out and setting up a time to speak with them. 419-794-3030. You can always go online to the website as well. That's arhq.com. Want to thank you so much for joining us, as always, here on America's Retirement Headquarters. It is the home of the Retirement Guys Formula, America's Medicare Associates, and Retirement Tax Partners. Hope you have a great week ahead of you. Hope they look forward to talking to you. Gentlemen, appreciate you taking the time. And as we wrap up here, I want to leave you with the final word.
Well, you know, we're kicking off a lot of great events coming up. If you go to the website, arhq.com, click on the events tab. We've got a couple of Medicare events here locally. We've got one of our most popular events, the Economic Summit, that's going to be coming up, talking about how to navigate the volatility, prepare for new legislation for 2025. Lots of great things on the website, arhq.com. And for those of you that are listening and you are looking to get your taxes done, if you're close to or in retirement time, give us a call. Ask us about our promotion where you could get 50% off of
America's
what you paid
Retirement
last year to have your
Headquarters
federal,
is
state,
located
and
at
local
1700
taxes
Woodlands
prepared,
Drive in Maumee, Ohio. You can reach them by calling 419-794-3030
remember, when
or
you think
online
retirement,
at
think
americasretirementheadquarters.com.
Headquarters.
Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Nolan Baker is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstance. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Nolan Baker, Ohio Insurance License Number 27787.